Hello, everybody, and welcome to your Daily 5 for the 20th of January. My name is Julius de Kempenaer, and I'll be hosting the show today, presenting to you from Amsterdam in the Netherlands. I am a senior analyst here at StockCharts.com and the creator of relative rotation graphs, and of course, they will be heavily used for this episode of your Daily 5. You will find my contributions in the RRG blog here on the site as well as on StockCharts Television, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. For this episode of Your Daily 5, I want to focus and zoom in on the financials sector. If we look at the relative rotation graph for sectors and we highlight XLF, which represents the financial sector, then we see that it is still inside the lagging quadrant, but it hooked up sharply not too long ago, 2 or 3 weeks ago. And especially this week, a lot of financial institutions, mainly banks, have announced their earnings, and that has put a lot of eyeballs on the financial sector and especially banks. And I think that especially the announcement of Goldman Sachs missing their earnings was a big thing, was a big blow. And everybody started to think that banks were really bad and the financial sector was bad. So I thought, let's have a quick look at what's going on inside that sector, because there's definitely not all banks in that sector. And even not all banks are bad. Not all banks are the same. So so what we see on a sector level is that we had this rotation back up, this quick hook back up, still lagging. So it's a bit of an early call, but this show is all about stock picking and finding some nice possible place. Let me put it like that. And oh, by the way, I'm gonna give you 3 on the long side and 2 on the short side, because I think this time also calls for opportunities on the short side, given the state where the market is in. As I pointed out in my sector spotlight show earlier this week on Tuesday, showing that the sector rotation model and the economic cycle are shifting to the right, which means a full recovery in the economy and a potential market top coming into place. But go back to that show, watch it if you want to hear everything about it. Now back to financials. So here is the sector rotation inside the lagging on the RRG. If we dive into this sector and look at the various groups, then we can see why XLF is where it is. So these are the groups against XLF. If we make that against SPY, then you will see that there's a lot moving to the top right. So there's a lot positioned here, and if we highlight XLF, that's how you saw it on the sector RRG, and here you see it in relation to the groups, and you can see why it is where it is, with a lot of stuff moving to the top right, and that's mainly the heavyweight stuff. If we put that against the financial sector, we can find the groups that are doing better or worse than the sector. Now, it's quite a bit in this sector. These are all the groups that we have for the financial sector, and if you zoom in, there are a few that are worth looking. So here's reinsurance index. It's a very interesting group, but mind you, it's when you look in the S&P 500, there's only 2 stocks in that group, so that makes it very thin, and they've already run their course. So I'm a little bit skeptic about that. Life insurance is definitely a group to keep an eye on the long side. That's just moving into the leading quadrant. That's looking actually pretty good. Now, if you look at consumer finance, it's moving into leading, but it's still far away to the left. So that makes it kind of dangerous for me. Look at mortgage finance, that's going really nowhere. Here is property and casualty insurance. And that's about to cross into the leading quadrant, which is a very good position and a very good group to focus on, which is what we're going to do in a minute. Then we have specialty finance. That's definitely one that should be avoided. We have insurance brokers, same story. Then we got full line insurance. That is inside weakening, but you can see that it's turning back up, and that makes it an interesting group to watch. And then you have investment services, which is actually moving rapidly towards the lagging quadrant. And here is the banking group, which is about to move into the lagging quadrant. So it's sort of confirming that weakness that everybody's talking about. And here is the financial administration index, and that is far away to the left, inside lagging, not very interesting in my opinion. And then we have all of the groups there. Now, so here's the asset managers. That's the one that's also very negative, is just crossing over into the lagging quadrant. Now, if we highlight the groups that are really standing out, then these are the ones. So that is reinsurance, life insurance, property and casualty insurance, specialty finance on the downside, financial administration, and asset managers on the downside. I've written an article in my blog very recently about financials that was actually published today. So if you go back, you'll find a little bit more extensive article about this financial index. And the groups that I want to focus on are the property and casualty insurance, and on the long side that is, and asset managers on the downside. And the stocks that I've picked are, the first one is inside the property casualty index. That's a good one. That's PGR, Progressive Corporation. You see the break to new highs and you see the relative strength starting to improve. So I think that is a good opportunity on the upside inside casualty insurance. Another one in that same group is Loews Corporation. It broke out of that range and it's now falling back. So it's coming to a level where it's potentially interesting to pick it up. And you can see that relative strength is trying to bottom out. Now, the third one here is TRV, Travelers. It broke out. This is a weekly chart. So it is now breaking back into the range. That makes it dangerous. We want to see a close above this barrier by the end of tomorrow's close. Relative strength is actually improving, and that is a good thing. I threw this in. This is life insurance stock, MetLife, breaking out, coming to the downside. This is not one of my picks, but I thought in life insurance, it's actually a pretty good pick. And then the two that are absolutely better avoided are TROW price. You can see a massive double top at the end of an uptrend completed. It's already underway, but the target is around 150 based on that double top pattern. And we don't even have to discuss the relative strength for this stock because it's horrible. And then finally, one of the biggest asset managers, if not the biggest asset manager in the world, Blackrock, is likely to follow TROW price. It's breaking out of that rising trend that we saw since the start of 2020. And if it breaks below, let's say that is 820, 815, 820, then it's completing a double top, just like TROW. And we're targeting 675 on the downside. And again, don't look at relative strength because it's horrible here for these asset managers as well. If we put those on an RRG, then this is what you get. We got PGR, Loews, Met, and Travelers to a little extent moving in the right direction, and we've got BlackRock and TROW price moving the other way as possible short positions. Ladies and gentlemen, thank you for watching. I hope you enjoyed the show. This was Your Daily 5 for today. I hope to see you again at a new episode of Your Daily 5 in the future.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.